Today I'm excited to reveal the full value of one of my portfolios, which has grown to a value of just over £38,000. Within this video, I'll walk you through the platform I've used to build this portfolio, the different account types it's made up of, the investments I've chosen, and finally, we'll dive into the portfolio's performance and break down exactly how I managed to achieve this milestone in just 2 years. Now, I've been investing in this particular portfolio since the 6th of February 2023, so it's been almost 2 years to the day. Through all of that time, one thing has remained constant, and that's my consistent efforts and my contributions. Regardless of news stories and market conditions, I've stuck to the plan, and that's what's made this growth possible. Now, the platform I used to build this portfolio was Vanguard UK, where I've opened both a self-invested personal pension and also a stocks and shares ISA. Now, starting with my smaller portion of this portfolio, the pension. The value currently stands at £6,349.51. You'll notice that a significant amount of £4,793 was deposited in July of 2023. This large upfront value came from an old workplace pension that I discovered. Rather than leave it with the old pension provider, I decided to move it over to Vanguard. This decision was largely based around having visibility of my funds and also having the flexibility to invest this money myself, rather than it being in the hands of the old pension provider. Now, the value that I moved over to Vanguard, I decided to invest in a globally diversified index fund. Specifically, I went with the FTSE Global All Cap Index Fund. My reasoning was simple. I wanted diversification and a hands-off approach. A globally diversified index fund such as this one provides exposure to companies all over the world, spreading risk across different regions and industries. By investing in this one fund, I don't have to worry about market ups and downs and having to individually pick stocks. It's designed to give long-term growth with as little work as possible. Now, moving back onto the performance, I haven't actually added a single penny to this account since I deposited that initial amount. Over the last 20 or so months, it's grown by just over £1,500, giving me a new total of £6,349.51, which provides a rate of return around 33.5%. You can see on this chart how the line has been in a gradual incline over time, which is what I'd expect to see with a diversified index fund such as this. It's not bad gains at all for simply leaving money in there and not having to lift a finger. For the time being, my strategy with this particular pension pot is to leave it and leave it to compound over time. I don't plan on adding any more to this in the near future, and I'll cover why that is later in the video. Now, moving on to the larger part of my portfolio, and that's in the form of a stocks and shares ISA, which I also hold with Vanguard. This is an account which the government allows you to invest up to £20,000 per tax year completely tax-free. Any growth and capital gains is also sheltered from tax, making it the ideal investment account. Now, this stocks and shares ISA now has a total value of £31,683.47. This is made up of just under £27,000 of my own contributions and then just shy of £5,000 of growth, leaving me with a rate of return of 52%. You can see that I first contributed to this account in February of 2023 with just £330. Since then, I've consistently added to this account every single month, with my monthly contributions also growing. The majority of the growth has come in the past 12 months as compound interest has really come into effect, which has been great to monitor. So when it came to my approach with this stocks and shares ISA, I wanted to go with a selection of ETFs. Now, for anyone new to investing, an ETF is essentially like a basket of companies, and it's an easier way of investing rather than picking individual stocks. You can get ETFs which cover particular markets, certain regions, and even certain industries. They also offer lower risk and greater diversification when compared with picking those individual stocks. You can see here the set of ETFs I've invested in and their weightings within this ISA account. The largest holding is VUSA, which is an S&P 500 ETF which tracks the largest 500 companies in the US. I have just over £18,000 invested in this ETF, with just over £3,000 of that being market gains. This makes up around 57% of my portfolio. Next, we have VWRL, which is an all-world fund. This makes up around 21% of my portfolio and currently has a value of just over £6,500. Almost £1,100 of this has been growth from my invested contributions. Now, throughout the past 2 years, these two ETFs have been my core investments that I've invested in every single month, whether the market's been high or low. However, outside of this, you'll see I've also added 4 other ETFs. These purchases have been my way of timing the market and essentially having a bit of fun along the way. Anytime I've seen a particular opportunity, when a market has been impacted by political or economic challenges, I've used this as an opportunity to buy within these particular markets at a discount with the hope of gaining more once they finally rebound. VFEM is an emerging markets ETF which covers many countries with the key holdings inside China and India. VUKE is a FTSE 100 ETF which tracks the performance of the top 100 companies in the UK. We've then got VERX which tracks the European market excluding the UK, and then finally a small holding in VJPN which tracks companies within Japan. Now, it's worth noting here that no doubt within this portfolio there's probably a lot of overlapping between these ETFs. If you're looking for inspiration within your own portfolio, these 4 additional ETFs are probably a little bit unnecessary. It was my way of adding a little bit of fun back into the portfolio and seeing if I could make any short-term gains off the back of market volatility. Now, if we take a look at our investment portfolio as a whole, you can see that everything's going in the right direction, and I'm really happy with how this portfolio has performed so far. My only advice here to anyone looking to start out is that your first year to 18 months will feel slow. However, if you stick to this consistent approach, from my experience, once you close in on that 2-year mark, the gains really start to get exciting. To highlight this, here you can see the growth from some of the months in my first year building this portfolio. Not the sort of gains you'd get too excited about. However, if you skip forward, this is a snapshot of how things have been looking the past 3 months. You can see in November and January alone, we've had some really impressive gains, which makes all of this worth it. So what are my plans moving forward? For the current tax year, which ends in April, I plan to max out that £20,000 ISA allowance. I'm on track to achieve that, and I'm hoping by April, this portfolio will exceed the £40,000 mark. This focus on my ISA is the reason I haven't added any additional funds into my personal pension. For me, the stocks and shares ISA is my main priority, and I know this might differ from other investors. The key reason for this is flexibility. While pensions have their advantages, the money is locked away until I'm at least 57 or likely to be even older by the time I reach that age. With an ISA, I can continue to invest, and I also have the flexibility to use that money way before I even hit retirement age. To give an example on this, say in a few years I decide I want to purchase an investment property. If my money was tied up within a pension, I wouldn't be able to do so. I don't know what the future holds, and I don't know when I'll want to use this money for other purposes. As we wrap up on this video, I want to bring it back to that earlier point of how consistency has really helped aid this portfolio over the last 2 years. It's proof that staying committed and sticking to a strategy really does pay off over time. Now, I do have other portfolios outside of this Vanguard one, which I plan to continue growing in the background as well. My main goal now is to reach a stocks portfolio of over £100,000. Looking ahead, I have some exciting plans where content is concerned. At the start of the new tax year in April, I'll be opening a new portfolio with a bit of a different strategy. I'll go into more detail on this in a future video, but this new series will all be around how quick I can get to £40,000 again in this new portfolio. My goal is to achieve that milestone in much less time than 2 years. I'll be sharing my strategy, decisions, and all my investments each month with complete transparency. So if you're interested in following along for that journey, make sure you subscribe. And that's it for this video. If there's any areas you think I might have skipped over, or if you have any questions, do let me know in the comments section. Thanks for watching, and I'll see you in the next one.